branch accounts. So if you don't watch the previous video, this is the continuation of the question that we did about branch accounts. So we are doing part B that was asking for the appropriation and the current accounts. So the appropriation is simply, it's very easy, very easy, the appropriation account. It is so easy. This is the details, the head office, the branch, and the combined. So the appropriation, in essence, they simply want you to appropriate, to transfer. Remember, the profit of the branch belongs to the profit of the combined. For example, if you have a certain business and it has very many branches, the profit of the branch, at the end of the year, they are supposed to give that profit back to you. So the profit of the branch belongs to the profit of the branch is supposed to, the branch at the end of the year is supposed to transfer its net profit to the head office. That's why these are the net profit that we are reporting. Net profit reported at the end of the year. This was for the head office, the branch, and the combined. So those of you who watched the first video, better watch it, because this is the continuation. Now we are seeing the branch net profit. Not just this is the net profit of the branch, but it's supposed to belong to the what? It's supposed to belong to the branch. In that sense, we are supposed to remove this net profit from the branch and we transfer it to the head office. Usually you remove it by putting brackets such that subtract itself. So when you remove it from the branch, you bring it to the head office. And here we are seeing bring to the head office, and finally the head office profit is this, and now the branch has no profit, and this is the combined. So that's the appropriation, as simple as that. Now the branch accounts, there are two current accounts. We have the branch current account and the head office current what? Account. But one thing you should know is the head office is a creditor in the branch, and the branch is the debtor to the head office. That's the first thing you should note. Another thing you should note is the head office prepares the branch current accounts, and the branch prepares the head office current what? Accounts. So in the head office, this is in the books of the branch, the head office current account is prepared. So for that reason, what should we do? We open the head office current account. The head office current what? Account. If this is the head office current account, in the particular books of the branch, because the branch opens the head office. So what should you put? You put the branch current account, because you have this branch. Remember, this is the creditor, the branch. So the branch has transfer its cash, and this branch current account is always found in the trial balance. Then also the branch has to transfer the net profit that it made to the what? To the head office. That's why we are seeing the branch net profit of this amount. So you pick this net profit from the number that was made by the branch. Then afterwards, we saw in our question that there are some expenses that are supposed to be paid by the branch, the other 25%. So the branch must transfer that money to the what? The head office. That's why we are seeing rates and insurance. So after you balance it off, and you get that value. Now when you come to the books of the head office, we are preparing the branch current account. The branch current account. So in the branch current account, of course, still we have the head office account. Remember, we said this one is the data. The data, you know, data are debited. So the branch, the head office current account, and this branch net profit, because it is losing. This net profit is coming from The branch is giving it the head office and coming from the what? From the branch. So the head office branch current account is showing that it's receiving net profit from the what? From the branch, and receiving certain amount of money from of this and this. Those expenses, cash in transit and goods in transit. So, and we talked about cash in transit, and we saw how we get cash in transit. The formula of getting cash in transit, we say differences in the current accounts equals to cash in transit plus goods in transit. Differences in what? Equals to cash in transit plus goods in transit. So in other sense, you get the differences. To get the cash in transit, you get the differences of the current accounts. You get the cash in transit, which is X plus the goods in transit, and we saw that we get the goods in transit from the difference between goods sent and goods received. Goods sent and goods received gives you the goods in transit. So after you balance off your current accounts, the major technique here is that the current accounts must balance. Their balance BDs must be the same. You are seeing here when you balance off, we got the balance came down of this amount and the same as here. So the same applies here. The balance came down is the same. If it's not the same, you go back and rectify your error. So that is it all about the current, how to prepare the current accounts as well as the appropriation. Don't forget to subscribe to Langton Academic Solution. And if you have any question, the contacts are always there: 077 17 55 239 and 075 99 40 79. In case of any inquiry, any question, anything academic, more especially in this field of accounting. So may God bless you.